why wouldn't I just buy a rental property today? And in 3 years, I'm going to look like a genius because like rents are going to increase, interest rates are going to be low. I'm going to look like a genius. Hey everyone, welcome back to the Mark Loeffler Experience. We got another great show here for you today. We're going to be talking about the Bank of Canada, what's going on, a little bit of the news from this week. It's been a wild ride, stock market, and a little bit about what happened there, in my opinion. And let's just get into it. So, Bank of Canada basically came out this week, and they said monitoring hot housing market amid warning signs. I mean, obviously they're not dumb, deaf, and blind. They see that prices went up a crap ton last year. They see that the start of the market this year has been super low inventory in probably 98% of the markets out there. They are basically watching this. So basically the line here is Macklem says rising prices, in particular for single family homes, are still a long way from the heated market the country observed 5 years ago. Basically, they track this on a curve, by the way. They are basically telling us that we're not at that curve peak. And he's saying that prices are going to go up this year, basically. The Bank of Canada Governor Tiff Macklem says house prices are going up this year. He says he's surprised by the rebound in the housing market. I'm not. When you give people free money, essentially, they are going to go spend it. I mean, the last video we did when we broke down how much mortgage you could get at 1%, at 1.5%, you could basically double the size of your mortgage from 6% to 1%. And you get the exact same house. So why would we be surprised that prices are going up? Because people can afford more. They want more space, right? This is what's going on. And again, in the condo video we just did, we're starting to see a pickup there because investors are coming in and saying, I get cheap money. I don't mind holding this. And maybe I don't have rent control on these buildings. So I'll put somebody in and then I can bump up rent when it becomes popular down there again, right? He says there are early signs of excess exuberance, with people maybe expecting the recent price increases to go on indefinitely. If you think we're going to get 30% per year every year, well, I mean, I think you live in a fantasy land. Do I think we're going to see above average price increases this year? 100% I do. Am I going to make any predictions for 2022? Heck no. Because basically in this other article here, they plans to maintain plenty of stimulus in the economy well into a strong labor market recovery. Basically what they're saying is they're going to keep interest rates low until we're back basically at full employment. And then beyond that, just so they don't cause hiccups in the market. They're more concerned with the job market right now than the housing market. That's good if you own a house or bought a house or are going to buy a house soon, because prices are obviously going to go up on those. So last year, Bank of Canada lowered its main policy interest rate to 0.25% and introduced large-scale asset purchase program to keep borrowing costs low for households and business. So basically, they're buying government bonds. Bank of Canada is committed to keeping rates low until inflation is sustainably at its 2% target. If you don't think that this is a controlled thing, then I don't understand how inflation isn't higher right now. I mean, I don't know if you've tried to buy stuff. So, I mean, just, a bike prices are up because you can't get them, right? Like you can get them, but people are paying more for bikes right now than they ever did. I have a friend in the steel industry. Prices are going up. They can't meet demand. Lumber, copper's doubled in price. Wheat's higher. All agricultural goods are higher. Only thing that's pretty much lower is oil, and that's starting to rebound as well. I don't know how we're only at 2%, because everything I see, we're seeing some really high price increases. I mean, what do I know really? I mean, I'm just a guy here making YouTube videos, except I am betting with my own money. I am in the stock market. I'm in the real estate market. Basically laid out a number of labor market reasons why policy needs to remain to accommodate it for a prolonged period. Includes help fostering immediate rebound in employment, limit scarring effects of long-term unemployment, and facilitate what appears to be a COVID-driven acceleration into digitalization. They're going to basically keep rates low until we have employment. And we've talked about it in many videos of where the unemployment is happening. It's in the youth, obviously younger people, not full-time. That's obviously a good thing. So if you own rental properties, what does that mean to you? It means that, well, number one, you don't need to lock into a long rate. You can take a shorter one and maybe refinance in a year or two and still get a great rate. Number two, they're going to kick up this stimulus to help the labor market expand which means that all these people that under 25-year-olds have moved back in with their parents are going to move out and be back renting your properties. I would think you would see an increased demand for rentals, which, increased demand. And we know in Ontario, at least, that when it's hard to increase supply, so that means rental prices are probably going to go up. So basically, Macklem's talking until he doesn't fully anticipate that the slack is going to be absorbed until 2023. He thinks there's going to be a structural change to reshape some segments of the job market. He's saying in this that they want to be able to, so the GDP that we lost, because in 2020 and maybe 2021 might be flat, might be a little bit stronger, but basically he's saying that we want to be able to gain that back. So he wants to see a 6% GDP growth year, 7%. I mean, that's what I'm reading from this, and this is what I get from it. Basically, in all of this is why obviously I read this stuff, and I'm keeping up, because I'm like, okay, how does this affect me? So number one, it's going to, if they keep rates low, it's going to increase demand on obviously properties, but they're talking about the employment market, which obviously directly affects me because I rent to people who are employed. Don't typically rent to people who are not employed. They're going to keep fueling that. This is what they're saying. So they're pumping a lot of money. So where do you want to be? Do you want to be in a tech center? Or, this is where like jobs are going to come. Like we still have 850,000 jobs to recover from pre-pandemic levels. And you have to understand that more people enter the workforce every day than leave it. And we're going to obviously bump up immigration. Maybe that 850,000 jobs, when this is all said and done, is 1.2 million jobs. These all things I look at when I say, okay, why wouldn't I just buy a rental property today? And in 3 years, I'm going to look like a genius because rents are going to increase. Interest rates are going to be low. I'm going to look like a genius. So, I don't know. I'm obviously not making that prediction yet. I am betting with my own money that we're going to do very well. We're going to get more jobs and we're going to do very well. I did say I was going to talk a bit about the stock market and what happened there, and maybe a little GameStonk. No, I'm not going to talk about GameStonk. Basically, what happened was we did see a sell-off in the U.S. markets because the U.S. signified that they were going to raise treasury rates. So the rates were going up. That means that a lot of times when rates go up in the treasury, then stock prices go down. And it's basically a triggered algorithm that says, oh, we got to get into treasury bonds. So we sell assets here and move them over here. That's kind of my opinion of what happened. And I'm still pretty much fully invested in the stock market. I was sitting a lot in cash, and I did try to catch the falling knife yesterday, and I did a couple trades. Jump down in the community group. If you got any questions about that, let me know. Happy to talk about it. If you guys want to know what trades I did on that day, just link up in the community group, and happy to chat with you guys down there. As well, I don't know if you guys know, but I'm doing a David Goggins challenge this weekend. It's basically, I'm going to run 4 miles. I'm going to run 7 kilometers every 4 hours for 48 hours, starting at 8 p.m. tonight until 4 p.m. on Sunday. So 12 times 7 for 84 kilometers in 48 hours. I'm going to put a link down below. It is for a cause for the North York General Hospital, which is not even my link. It's a guy I'm running with. He's doing some fundraising. I really didn't. I'm just showing up to do the run, just to have fun. So yeah, if you guys want to donate, Xavier's link is down below. Be happy if you could. If not, don't worry about it. Thanks everybody. You guys have a great weekend, and think about me when you're watching this video, because I'm probably going to be running in the rain or the cold or the sleet or the snow. All right. Thanks everybody. We'll catch you in the next one.